Welcome to the assignment guidance for management accounting and decision making, part of the OTHM Level 5 Diploma in Business Management. We'll walk through the two tasks, one proving your understanding, the other applying it to real financial data. The unit overview. A Level 5 20 credit unit, assessed pass or refer, so every criterion must be met. The aim is to use timely, accurate financial information to support management decisions. There are two pieces of evidence, a Task 1 essay and a Task 2 report, both in Word with Harvard referencing. Don't submit generic accounting notes, keep it focused on decision-making. The assessment map. Task 1 is a 1,500-word essay covering criteria 1.1, 1.2, 1.3, 2.1 and 2.2. Task 2 is a 1,500-word report covering 3.1 and 3.2. Task 1 proves your understanding of management accounting. Task 2 proves application, with calculations, interpretation, and decision-making advice. Before writing, choose your business and data. Task 1 examples can be general, but use business examples to show understanding. For Task 2, use the financial statements your tutor supplies. Suitable businesses include Tesco, Sainsbury's, Marks & Spencer, EasyJet, Greggs, or a local business with clear data. Keep the same business consistent throughout Task 2 and use annual reports, industry data, textbooks, and lecture materials. Task 1 is an essay on management accounting, decision-making, and the concepts, tools, and techniques involved. Here's the Task 1 word plan, a 100 to 150 word introduction linking to decision-making. Then definitions of management accounting and decision-making. A comparison of management accounting versus financial accounting. The concepts, such as cost behavior, relevant costing, responsibility accounting, and budgeting. The tools and techniques, like break-even, variance analysis, marginal costing, ratios, and budgeting. And a conclusion on why management accounting improves business decisions. For 1.1, define management accounting as internal financial and non-financial information used by managers for planning, control, performance monitoring, and decision-making. Explain that it's future-focused and serves internal users, unlike statutory reporting. Use an example, like a retail manager using weekly sales, labor cost, wastage and margin reports to decide staffing and pricing. Explain purpose, users, timing, and practical use. For 1.2, a definition alone define decision-making as selecting the best course of action from the alternatives using relevant information. Explain operational, tactical, and strategic decisions, and link them to management accounting information such as pricing, budgeting, investment, cost reduction, and product mix. For example, if ingredient costs rise, a bakery can use margin and break-even data to decide whether to raise prices or cut waste. For 1.3, compare management and financial accounting. Management accounting serves internal managers, is frequent and forward-looking, uses flexible reports and budgets, and supports planning, control, and decisions. For example, break-even analysis for a new product. Financial accounting serves external users like investors, lenders, and the tax authority, is historical and usually annual, uses formal statements under accounting rules, and exists for accountability and compliance, for example, a published income statement and balance sheet. For 2.1, describe the key concepts, cost behavior, how fixed, variable, and semi-variable costs change with activity. Relevant costing, using only future costs and revenues that differ between options. Contribution, selling price minus variable cost. Budgetary control, comparing actual results with the budget through variances. Responsibility accounting, assessing managers only on what they control. And decision usefulness, information that's accurate, timely, relevant, and cost-effective. For 2.2, describe the tools and techniques, budgeting for cash, sales, production and overheads, variance analysis of actual against budget, break-even and cost volume profit, ratio and trend analysis of profitability, liquidity and efficiency, marginal costing using contribution for short-term decisions, and absorption costing, allocating all production costs to units. For each, describe what it does when it's used, what information it needs, and how it helps management decisions. A few Task 1 evidence tips. Use headings that match the criteria from 1.1 to 2.2. Don't just list concepts, explain them, and connect them to managerial decisions. Use at least 2 textbook or academic sources, plus reliable business sources. Keep examples short and focus on explanation over calculation, and end each section by showing why the point matters to managers. Here's the difference good writing makes. Weak writing says budgeting is when a company makes a budget, it helps managers. Better writing explains that budgeting is a planning and control technique where expected income, costs, and cash flows are prepared before the period, then compared with actual results to identify variances. For example, an adverse labor cost variance prompting a manager to investigate rotas or overtime. Add Harvard citations in the text and full references at the end. Common Task 1 errors to avoid: writing a general accounting essay without linking to decision-making, confusing management and financial accounting, naming tools without explaining what they do, relying only on websites with no academic sources, and missing your Harvard citations or reference list. Task 2 is a report applying management accounting techniques to solve problems and inform decisions. For Task 2, use the accounts your tutor provides. Identify one or more business problems from the data, such as falling profit, rising costs, weak cash flow, low margins, or poor inventory control. Apply suitable techniques to the data, then use the results to suggest solutions and explain how managers can decide from the information. This task is not just theory, it needs calculations, interpretation, and recommendations. Here's the Task 2 report plan, an introduction covering the business, the data, and the purpose. Problem identification, using the data to show the issue. Then Technique 1 with calculation, interpretation, and solution. Technique 2, the same. Decision advice on what managers should do and why, and a short conclusion summarizing the decisions and their limitations. To find business problems from accounts, read the signals. Sales up but profit down suggests costs rising faster than revenue. Use contribution and variance analysis. A falling gross margin points to pricing, purchase cost, or wastage. Use margin analysis and cost volume profit. A falling cash balance suggests poor collection. Use a cash budget. Rising stock suggests slow-moving inventory, check inventory turnover. And high overheads suggest weak cost control, use budgetary control. Here's variance analysis in practice. Variance equals actual result minus budgeted result, labelled favourable or adverse, and you need the budgeted and actual figures. For example, if budgeted labour cost is £40,000 and actual is £46,000, that's a £6,000 adverse variance. The manager should investigate overtime, scheduling, productivity, wage rates and sales volume before cutting staff. Break-even and cost volume profit. Break-even units equal fixed costs divided by contribution per unit, where contribution is selling price minus variable cost. Use it to decide pricing, minimum sales targets, and viability. For example, with a £20 selling price, £12 variable cost, and £80,000 fixed costs, contribution is £8 and break-even is 10,000 units. If expected sales are only 8,000, managers must raise price, cut costs, grow volume, or reject the plan. Contribution and product mix. This is useful when a business has limited labour hours, machine time, shelf space, or cash. Calculate contribution per unit, and where a resource is limited, contribution per limiting factor. For example, Product A gives £6 of contribution using 2 labour hours, that's £3 per hour, while Product B gives £5 using 1 hour, £5 per hour. If labour is limited, prioritise B for the higher
Ratios
contribution
and trend
per
analysis.
hour. Cover profitability with gross and net margin and return on capital employed, liquidity with the current and quick ratios, and efficiency with inventory turnover and receivables and payables days. Don't just calculate a ratio and stop. Compare it against the previous year, budget, a competitor, or the sector, then explain what decision it supports, such as controlling costs or improving credit control. To turn calculations into decisions, state the result clearly. For example, the gross margin has fallen from 32 to 27%. Explain the likely cause from the data, such as cost of sales rising faster than revenue. Give a practical solution, like renegotiating supplier terms or reviewing prices. Explain the implication, whether to approve, reject, delay, or investigate. And mention limitations, such as 1 year of data, inflation, or seasonality. Here's a worked mini example. The problem? Revenue rose 8%, but net profit fell 15%, with labour and distribution costs up sharply. The technique? Variance analysis shows labour £12,000 over budget and distribution £9,000 over, and gross margin down from 35 to 31%. The recommendation: review overtime, delivery routes, supplier prices and pricing, but don't cut marketing while sales are growing. The issue is cost control and margin protection. On referencing and evidence quality, use Harvard in-text citations whenever you use theory, definitions, frameworks, or annual report data. For example, Drury, 2021, explains that management accounting supports planning and control through internal information. Your reference list should include textbooks, journals, lecture materials, and the company accounts used in Task 2. Put detailed calculations in appendices, and always explain the calculations in your own words rather than copying from websites. To submit, provide Task 1 as a Word essay and Task 2 as a Word report, each recommended at around 1,500 words, excluding diagrams, references, and appendices. Email your work to learnerwork@ukversity.co.uk after completing the unit delivery period with your name, course, unit title, and task number in the subject. Before submitting, check all criteria are covered, references are complete, calculations are shown, and appendices are labelled. A final checklist. For Task 1, have you defined management accounting, explained decision-making, compared it with financial accounting, and described the concepts, tools, and techniques? For Task 2, have you used the tutor's accounts, identified the problem, applied the techniques correctly, interpreted the results, and recommended decisions? A pass-level answer is specific, evidence-based, calculated where required, and clearly linked to management decision-making. Good luck with your assignment.